All right, this problem here, just by reading the sentences here, it can pretty much guess that whether the results is favorable or unfavorable to the business, right? Because their budgeted price spent on producing a product for a certain material is 30 cents. At the end, they actually spent 40 cents for each pound. Right, efficiency-wise, they should have used only 80.8 pounds of materials, and at the end they used 1.1 pound. So efficiency part, they actually spend more than they expected, and the price per pound, they actually spend more than they expected to. So you know what's unfavorable here, we're trying to determine is how much in dollars. So price variances here, you'll be using actual price minus the standard price, the budgeted price that we got for the per pounds of glass. And then we times the actual quantity that we used to produce the 6,900 glasses. So the actual pounds we used is per pound cost is 40 cents, and then price per pound originally when we budgeted is 30 cents. So each pound we spend additional 10 cents on it. And then for these pounds we would be using to produce the glasses. So for the price here, 10 cents additional spent on the glasses here is 6,900 glasses. Each glass, it tells us that we use 1.1 pounds to produce it. Okay, so the right-hand part of the equation here is just the actual quantity that we used. And we just want to focus on price differences here. So remember that flexible budget and actual budgets, we're using the actual quantity that occurred. The one that used budgeted quantity is static budget. So here, both sides here, we use 6,900 glasses, and the actual pound we spent is 1.1, which times the differences from price. So overall, you should get 759 unfavorable cost, because each pound that we spend on producing the glass, we spend additional 10 cents on it. Okay, what about efficiency variances? We will be using the differences in terms of the pounds that we expect to spend, the quantity-wise. So 6,900 glasses, we plan to use only 0.8 pounds for each glasses, but we use 1.1. So you can actually pull the 6,900 out. Basically, it's just the difference between these two, 1.1 minus 0.8. And then for each pound, we expect to spend 30 cents on it, the standard price. So overall, the variance should be 621. So this means that since we spend additional material on producing a product, it will cost us more. So this part here is additional cost is unfavorable. Again, efficiency variances here, we're just comparing the actual pounds that we used against the budgeted pounds. So for each glass, we expect to spend 0.8 pound, but at the end we actually used 1.1 pound of materials. So the difference is here, the 0.3 pounds of materials using the standard price. Overall, this cost us more than we expected, $621. Now if I add another question here, let's say labor cost is exactly the same as we budgeted, manufacturing overhead is also exactly the same as we budgeted, what would be the flexible budget variance for this problem? Why is it 0? Flexible budget variance. This is material, right? So besides materials, we have labor cost, direct material, direct labor, manufacturing overhead. If these two is exactly the same as what we budgeted, what's really different, what forms flexible budget variance is adding these two. So that would be 759 plus 621, $1,380. would be the total flexible budget variance. Because remember, what we're trying to do here is just part of flexible budget variance. Okay, so if this problem tells you, asks you another question, what is flexible budget variance, that will be adding these two, in the case that there's no labor cost, manufacturing overhead cost differences.